Welcome back. In this episode, we'll be looking at ASML, a critical company in the semiconductor supply chain. ASML lagged the market in 2024 and was down just over 3%, while the S&P 500 was up roughly 25%. And here you see ASML charted in blue and the S&P 500 charted in red. We'll be looking into what this company does, what makes their products so special, the opportunities and risks, and why, in my opinion, they have massive growth ahead. I started buying this company recently, and it's currently around 8% of my portfolio. If we look at the overall portfolio, we're sitting just under $66,000. Last week was good for the portfolio in terms of gains after some positive inflation data was released, but we're not going to get into that in this video. Let's jump into ASML. As I mentioned, ASML is critical in the semiconductor manufacturing process and the continued innovation of chips. ASML is considered part of the wafer fab equipment market, and what that means is the specialized machinery used in semiconductor facilities to process raw silicon wafers into chips by performing various steps like deposition, etching, and lithography. If that didn't make any sense to you, that's okay. It didn't really to me either at first. Essentially, this means that ASML is in the business of providing specialized machines to semiconductor manufacturing facilities. In fact, ASML is one of the biggest players in this growing market, as you can see here. As the extremely confusing summary stated, this process of processing raw silicon wafers into chips is split into multiple stages, which is broken down by this chart. First, we have thinning and CMP, then deposition, then dry and wet etching, then ion implanting, then ASML specialty patterning, then metrology inspection, and finally wafer bonding. As you can see, ASML focuses in on a single stage in this process, and they do it way better than anyone else. Moving on to their products, ASML makes these extremely complex lithography machines. I mean, just look at this thing. It looks like a spaceship. This picture was taken from an Intel facility after they finished assembling it, which took between 4 to 6 months based on what I'm reading from this article, and cost them a reported $350 million. So with my entire portfolio, I could buy like one screw for this thing. Anyway, ASML's products split into two major categories: extreme ultraviolet or EUV lithography systems and deep ultraviolet or DUV lithography systems. These categories then split off into high NA and low NA systems, which goes into the resolution and the precision of the systems, but we don't have to get into all that. The main takeaway here is that EUV lithography machines are the most advanced and most precise lithography machines in the world, and ASML is the only company that knows how to make them. The importance of this technology is that lithography is a key driver for shrink, enabling what is known as geometric scaling. This determines the smallest feature sizes that can be printed on a chip, and therefore the number of transistors and the performance, as explained here by ASML. In simple terms, the increased precision allows chips to become smaller and smaller, and it impacts performance through faster speeds, lower power consumption, and more efficient chips. To bring this back to the point, their competitors are just behind, and their equipment doesn't allow semiconductor manufacturers to produce chips that are as advanced. That being said, EUV machines still produce a small portion of today's chips. The majority is actually still made by DUV machines. So while competitors like Canon and Nikon can produce those machines, they're just not as precise and efficient. As we saw earlier, it took Intel up to 6 months to assemble just one of ASML's machines. But guess what? Intel's engineers will have no idea how to assemble or fix it. So they have to work closely with ASML's engineers to assemble, fix, and maintain the machines. That's where the recurring revenue comes in. As companies continue to adopt ASML's machines and their install base gets larger, so does the installed base management revenue, which you can see here is continually growing over time. The last thing to touch on regarding their products and services are the refurbished systems, and this is important to factor in their growing install-based management portion of the revenue. As explained by ASML, our refurbished products business refurbishes and upgrades our older lithography systems to extend their lives and offers associated services and support. We currently offer refurbished PAS 5500 and first generation AT, XT, and NXT systems. ASML systems have a very long operational lifetime that often exceeds their role at the initial customer. Many customers are therefore able to generate value by selling off their systems they no longer require To support this sustainable product use and ensure used systems deliver the quality that ASML stands for, we are actively involved in the used system market. Remarkably, 95% of the systems that we have sold in the last 30 years are still in use. So let that sink in and remember that these systems are so advanced that they're essentially useless without ASML. Moving on to the financials of ASML. First of all, over the past 10 years, they have average annual revenue growth of 15.5%, and they have average annual earnings per share growth of 19%. Clearly, this company has far outpaced the growth of the S&P 500, which is a characteristic we look for. However, it's never an indication of future return. Looking at analyst expectations, they expect the company to grow 15% top line, or revenue, and 20% bottom line, or net income, which is in line with ASML's expectations and guidance. During ASML's last earnings call, they said they expect the overall market recovery to extend into 2025, and that refers to the slowdown in consumer spending due to recent inflation, which is essentially leading to customer cautiousness and some push out in their investment with ASML. They also state that they will likely come in with revenue numbers closer to the lower end of their previously guided ranges for 2025, so around 30 to 35 billion euros. We'll just have to wait and see. However, they do expect growth to pick back up in the back half of 2025. This is just something to be aware of regarding the short term, and that's likely why we've seen this move down in the price since the middle of 2024. But as always, I don't really care about the short term. I'm going to take advantage of the lower price. The long term story remains intact, in my opinion. Another metric I like to look at is the free cash flow yield. However, with ASML's short term trouble of market weakness and order delays, and therefore a higher inventory level and reduced customer down payments, it doesn't really make sense, in my opinion, to look at the free cash flow yield right now. I would expect the yield to improve in the coming quarters as the company recovers, but I'm not going to make any exact predictions or base my investment off this metric in this case. As we can see, during good times, their free cash flow can be really explosive, and I expect that long term trend to continue with both increased sales and growing margins and just overall operating leverage in their business. Another important and key metric I like, ASML's return on capital employed, which is a ratio that measures a company's profitability and how efficiently it uses its capital to generate profits, is looking very strong, sitting at around 40% on an annual basis, which again just shows how well positioned this company is and how much pricing power they have, which obviously comes from their moat and how advanced their technology is and how customers simply can't bypass them. I also want to mention a return on capital employed of 20% is generally considered strong, both in the overall market and in the semiconductor equipment industry. So they're far outpacing both the companies in their industry and in the overall market when it comes to this metric. Next up, dividends and share buybacks, which are more characteristics I look for in my companies. Uh, Both dividends and share buybacks are important to ASML and part of their long term plans of creating value for shareholders. Their dividend is slowly growing over time, and they're really focused on taking shares off the market. And if we look at the return of capital chart here, which shows you how much money the company is returning to shareholders, share buybacks follow their free cash flow very closely. To explain why that is important, their earnings are growing, and they're constantly using a portion of their growing free cash flow to buy back shares or reduce the total number of outstanding shares. So that can create this explosion in earnings per share growth, making the company more profitable on a per share basis over time, which makes your shares more valuable and makes you a greater beneficiary of the company's future earnings. Lastly, in terms of valuation, this company demands a forward PE of roughly 30.2 after its recent dip. That's compared to the average of like 24 forward PE of the S&P 500. However, with a company that has such a strong moat and pricing power like ASML and revenue and earnings growth, not to mention their future growth potential, which we're about to get into, you can expect a company like this to trade slightly richer than the market. Next up, I want to talk about the future growth potential of this company. And this is where I get really excited about the long term future of ASML. First, we have to think about what is driving current growth. In the past few years, growth was driven by a boom in everything, largely from the aftermath of COVID and the stimulus money that came with that. The economy and demand for both electronics and pretty much everything just boomed. So since 2022, growth has slowed down due to inflation and stricter monetary policy, which just refers to raising interest rates. However, the demand for AI chips has obviously been the main driver of growth in the past 2 years. And that's largely due to big tech companies spending more than ever on capex. My belief is that AI chip demand will continue, and based on what I'm hearing from the big tech companies, they're not slowing down in the short term. Also, from the TSMC earnings call last week, they reported and guided for continued strong demand, particularly in AI. In the long term, I obviously believe the explosive growth rate that we've been seeing will slow down. But when I think about the continued evolution of AI and how it will pretty much affect every industry we can think of, I see the long term potential. Some of the use cases currently being discussed are healthcare and AI's ability to help doctors diagnose diseases, monitor vital signs, test and develop new drugs, do predictive analysis on health data to, improve services and patient outcomes. In education, by providing one-on-one learning experiences for every single student. I mean, you hear about the bad teachers that simply don't care, or the teachers that are so overwhelmed with work and don't have the time or resources to help every student. AI could be huge for that. Think about finance by analyzing data and making decisions on data faster than humans ever could by doing taxes or any sort of heavy numerical job at higher efficiency and accuracy. Think about transportation by analyzing traffic patterns and monitoring vehicle performance, and obviously the continued development of self-driving cars. Obviously, Tesla's full self-driving is a huge component of that, and the list goes on. There are a ton of more applications, but in ASML's case, this isn't just about AI and how we think about its current applications. When you go into the more physical applications of AI, like cars, buildings, cities, robots, devices, and smart home devices, even energy, you realize that all of these things need to become smarter through electrification and the use of more and better chips. AI will simply come along with the need for more chips, chips that enable AI and machine learning functionalities. To put this into perspective, we're seeing AI in devices like phones and computers and TVs and smart home devices. All of these devices need newer and better chips. The energy transition that is very slowly happening, shifting away from fossil fuels into renewable sources. Let's take solar energy as an example. The solar panels need chips. The energy storage systems need chips, and the systems that distribute the energy between your house and the energy storage need chips. Some of these things are probably way down the line, and some might never even happen. I don't know. However, I am confident that a majority of them will happen, and I'm confident that our world will continue to change through electrification. And I do know that technological developments are happening way faster than I ever anticipated, and I'm blown away by our advancements every single day. That's why I'm holding this stock for the extremely long term, and I hope that this company can continue to innovate and stay ahead of their competition. Now for the risks. As always, ASML's current advantage is not a sure thing. Competitors could come up with better products or competing products, especially since these machines are getting so advanced now that both the time and the cost to continue innovating is increasing, and that trend is not expected to stop. At some point, ASML suppliers may not even be able to or willing to continue co-developing this technology due to the high investment required, and that could lead to higher research and development spend on ASML's side. You never know, ASML might one day decide to spend less on R&D and lose their competitive advantage. It's also a risk. And that's why when you invest in these individual stocks, you really need to stay up to date on what's happening with the companies every year and every quarter. Another big risk that is often brought up uh, around ASML is the concentration risk. ASML's biggest customers are TSMC, which is a semiconductor manufacturer, Intel, and Samsung. In 2023, more than half of its revenue came from just two of those top clients. Now, ASML never disclosed which ones, but I think it's pretty safe to assume that TSMC is one of them, as they're the largest semiconductor manufacturer in the world. To take this a step further, most of TSMC's facilities are located in Taiwan, and that concentration introduces geopolitical risk for ASML. Increasing tension between China and Taiwan could disrupt TSMC's operation and therefore affecting their ability to purchase equipment from ASML and fulfill chip orders globally. While TSMC is diversifying its manufacturing footprint with facilities outside of Taiwan, this will take time, and ASML remains exposed to these risks in the near term. Or does it? The clips you're seeing on screen right now are inside TSMC's new Arizona fab, and fab refers to a facility where semiconductors are made. If something were to happen to TSMC's Taiwan fabs, that could, in my opinion, be good for ASML because the world isn't going to stop moving, and that could just speed up the process of these facilities being built in other countries. Currently, many semiconductor facilities are being built in the US, including 3 fabs in Arizona by both Intel and TSMC, 2 fabs in Texas by Texas Instruments and Samsung, 2 fabs in New York by Micron and Global Foundry, and another fab in Idaho by Micron, meaning more machines needed from ASML. So you can decide if that's a risk or an opportunity for ASML. This is obviously a highly speculative and perhaps overly optimistic personal opinion. So, as always, do your own research, and this isn't financial advice. If you have any questions for me or want to discuss any of the points I brought up in this video, join the Discord using the link below or send me a message on Instagram. As I mentioned at the start of this video, I've been buying ASML for the past few weeks, and I'll continue to buy this one hopefully for many quarters to come. In the short term, that really depends on how quickly they bounce back from this dip, but in the long term, I will likely be buying this company for years to come. I like to buy these high quality companies when they're facing short term negativity or volatility, and while I'm getting more value for my money. I believe it's only a matter of time until some positive news or earnings come out, taking the stock right back up to all time highs. As you can probably tell from my portfolio, I'm investing very heavily in this next wave of technology with my current positions in both ASML and AMD, which currently are taking up something like 30% of my portfolio. And that share will likely grow as I continue to buy ASML in the coming weeks. I do have my eye on a few other companies that could benefit from this shift in technology, but more on that in future episodes. If you found value in this video, subscribe so you don't miss future episodes, and a like would really help me out. See you in the next one.